We're on the jobs report, the economy, and everything else. We're joined by Mark Hamrick, Washington Bureau Chief at bankrate.com. There's so much to talk about. Let's start with the jobs. 200,000, a much lower number was expected. Now, I've heard both sides. It's a great number and everyone's clapping, but at the same time, number means nothing because we had this shutdown and there's all these data points that are all weird, basically. How seriously do we take this number?
Well, it's one of the most important numbers we get in the course of a month. It is the first jobs report we've had since the shutdown occurred. We know that these numbers are very often revised in subsequent months, but yeah, this is the big kahuna among economic reports out on a monthly basis.
Did you like the number?
Well, I think that when the number comes out that's very much a surprise, there are two real things that are potentially going on there. One is something's happening in the economy you don't know about. The other could be the report's wrong. This one, there might be a little of both going on there.
Okay, let's start with what we do know. They added 200,000 jobs last month. People say, that's good. Then the unemployment rate went up. Then people go, well, that's not so bad. And that defies sort of the logic for all of us in the room here where we think about, okay, high unemployment is generally bad. So explain to us why it's not that big of a deal that the unemployment rate actually went up.
Yeah, so those of us that live in Washington and follow this stuff all the time know that there are two surveys for this report. One is a so-called household survey from which the unemployment rate is derived, and as you said at the outset, that was counting people who were furloughed essentially for the purposes of the report. They were unemployed. The other part of the survey is the business survey. That's the one that tells us how many jobs were added, and that's the one economists tend to look at, the one the financial markets follow most closely. It's thought to be the number that is perhaps most accurate. So there you go.
I don't want to get too political here, and it's easy to do so, but a lot of people here around this city, and probably in New York as well, will argue whether the jobs number is good or bad. In general, in my book, if you're adding jobs, that's generally good. So the unemployment rate has come down during this year, but a lot of people say we're not adding enough jobs. I don't know what the number is. What is the right number of jobs to add? Why do people keep saying that it's not good enough?
Well, we have come out of the worst crisis since the Great Depression, and it's a little like a boxer who's staggering and coming back up and waiting to see if there's another punch thrown. Right now, that boxer seems to have its sense of balance, and maybe he's ready to throw a punch himself. But past recoveries, we've seen 250,000, 300,000, 350,000 jobs added a month. This is subpar for a...
So compared to what we used to be at,
Exactly.
This is not as good, but it's not awful. We're not losing 200,000 jobs a month.
Absolutely. Better than losing 700,000 a month.
So let's fast forward to what the Fed might do. I'm just going to assume, by the way, Yellen's in office
Yeah, I think
next
that's a good
year.
assumption, yeah.
A lot of people are worried that the Fed might stop pressing the gas pedal down. Do these numbers, how does that impact that decision?
Well, the consensus right now is that the Fed begins to ratchet down the number of asset purchases that it's engaged in beginning in March. We have a news conference to be held by Chairman Bernanke in December, and that's his first opportunity to start making some big hints, and we'll be watching that. I'll be in the room.
In 2014, the economy is always in focus, but this year, a lot of it's been on the jobs, it varied in terms of what we've been worried about. What do you think we'll be worried about in 2014?
Well, I don't think we're yet at the point where we start worrying about inflation, but there are some people on the Federal Open Market Committee of the Fed who worry that unintended consequences are percolating out of view while all this stimulus is being applied not only by the U.S. central bank, but by central banks all over the world. I think perhaps in 2014 we get some modest acceleration in the U.S. economy, and it was interesting today, the stock market really took good news in stride as good news, and we haven't seen that for a while.
Just very quickly, we're almost out of time, France, the downgrade. It was a big deal, and I would think, oh, the market might be very scared from that. We completely ignored it. What's going on?
Well, I think Europe is seen as on the mend, and certainly not in the crisis mode we saw a couple of years ago. That's good news.
Mark, always good to have you here. Have a great weekend.